Hi guys. So since last week we spoke about the proposed withholding tax increase, this week let's break down how that withholding tax increase is going to impact our fixed income unit trust investments. Now there is two things that we need to know before we get into the topic. Firstly, I reiterate this and I did last week as well. A withholding tax is not an additional tax. It's simply your normal income tax just paid forward, right? That's the first thing. Second thing, it's very important to note, not all fixed income instruments have a withholding tax. For example, government securities like treasury bills and treasury bonds don't have a withholding tax component, where other fixed income instruments like fixed deposits and debentures do have a withholding tax component. So when you equate this to a unit trust, it simply means that the withholding tax that unit trust will pay on behalf of its unit holders will differ depending on what instruments are in the unit trust, right? So for example, a unit trust which has invested only in government securities will not pay any withholding tax because government securities are exempt from withholding tax. But what that means is that the unit holders, you and me, when we receive our interest from that unit trust, we will just have to pay it at the end of the financial period. Whereas, say for example, a unit trust which has a component of its money in debentures or fixed deposits, these unit trusts will pay some sort of withholding tax depending on the mix of instruments on behalf of the unit holders. So in short, depending on what instruments are in the unit trust may pay some sort of withholding tax on behalf of the unit holder. If there is no withholding tax, then the unit holder simply has to pay that tax at the end of the financial period along with their personal income tax. So to summarize, an increase in withholding tax does not reduce your net returns from a unit trust. On the surface, it may seem to do so because some of the tax is now being paid at source rather than at the end of the period. But whatever withholding tax the unit trust pays on behalf of us, the unit holders, can simply be claimed back at the end of the financial year when you're paying your personal income tax. So although there is a misconception that an increase in withholding tax will reduce unit trust returns, essentially that does not happen. It simply changes the time frame of when the tax you anyway are due to pay has to be paid. I hope that answered some of the questions or queries that you guys may have had. If you do have any further questions, feel free to drop us a comment on the video and we'll be happy to respond.